we have management on the show. PVR INOX is the next management on the show. Shraddha Kapoor and Rajkumar Rao's 3-2 has witnessed strong box office collections over the last 5 days. Q1 performance for the company, though, was quite lackluster due to IPL elections. To discuss this and more, we are joined by the company's joint MD, Sanjeev Kumar Bijli, and CFO, Gaurav Sharma. Good afternoon, gentlemen. Thank you so much for joining us here. First off, give us a sense of how exactly collections have panned out for 3-2, how is occupancy rates, and what kind of ticket pricing are we seeing, especially over the last 5 days?
Yes, it's been a phenomenal weekend. Of course, it was a long weekend starting with 15th of August. And then yesterday as well, it was Rakhi. So we got the advantage of 5 days weekend. The film has done phenomenally well, around over 240 crores net box office in the first 5 days. And it seems to be still going strong. We still are expecting it to do well on this weekend as well, as there's no other new film releasing this weekend. The occupancy has been roughly about 68% over the weekend, and the ATP has been around 250 to 260 rupees. So yeah, we're very happy with the performance of this film.
Okay, yes, and so are the viewers, right? They're thoroughly enjoying this particular release that has come by. Mr. Sharma, welcome to the show as well. I wanted to understand if occupancy rates are higher, as Mr. Bijli mentioned, around 68% of the weekend. The average ticket price has gone higher. What about ad spends? Are you seeing some comeback in terms of ad spends? Ad spends were under pressure the last 2 quarters. So are we seeing a comeback there as well?
Yes, definitely. Ad spends are driven by films that create buzz. And, 3-2 and the films which got released in the last couple of months, like Wolverine and Deadpool, and before that, Kalki, has created a lot of buzz, which has attracted a lot of marketeers to advertise in cinemas. And we are seeing a very strong uptake in advertisement revenue as we enter into the festive season in the next few months. And the pipeline of movies which is lined up for release across different languages is very strong. We strongly believe that we'll see a very strong, robust growth in ad revenues sequentially quarter on quarter.
So, Mr. Sharma, when you had earlier indicated on an absolute basis it could reach pre-COVID levels by FY25, are we on track to achieve that number?
As of now, it seems to be on track, yes.
Okay. Mr. Bijli, coming to you, 26% occupancy, is what we saw at the end of Q1, and you mentioned that FY25 will largely be similar to what FY24 panned out by. Now, buoyed by the success of the last 2 films, can you expect to see slightly higher occupancy rates? And also another question, average ticketing prices, has moderated when you're looking at it, especially on a sequential basis. You have come out with a couple of offers, So do you expect higher volumes and lower ATPs going forward?
I think to your first question, of course, we're hoping that the occupancies and admissions are high in Q3 and Q4, and Q2 so far is panning out very well also. But Q3, we have a range of blockbuster films coming out in Hindi, regional, and English. We don't have much of visibility of Q4 right now as far as the lineup is concerned. But Q3 definitely is looking very strong on paper, and we are hoping that all these films do better at the box office. We get better higher admissions, and therefore, because of this, we're able to get better ATPs as well. And we're also seeing that there is a huge uptake in propensity to consume formats as well. People are preferring to watch films in director's cut, luxury formats, IMAX, 4DX, which have a higher ATP anyway. So yeah, the answer to your question is that we're hoping that both actually do have an uptake in Q3 and hopefully in Q4.
Okay. Mr. Bijli, just to follow up on that then, you're talking about different formats being preferred by viewers as well. What does it mean for screen additions? You've been hovering around that 1700, 1750 screen mark as on Q4. What is the addition plan in FY25? How much would be coming from premium screens? And would that continue to be your strategy going forward?
We have about 120 odd screens which are under fit out right now. And they're a mixed bag, actually. So it's a mixed bag of premium, large-scale formats like PX and IMAX and mainstream seats. But roughly the split is about 20% would be the formats, about 80% will be mainstream. So that's what is going to be the rollout going forward. but we're also looking at shutting about 60 to 70 underperforming screens, which are basically have come to an end of life cycle. We had started doing this from last year itself, and therefore the net addition of screens will be about 50 to 60 this year.
Okay. Mr. Sharma, talking about the food court JV business that you all announced a while ago with Devyani, we understand that you've named it a street junction, and you said that in the next 2 to 3 months, it will actually get operational. Could you give us a sense of timelines? What is the initial set of stores that you have planned by FY25? What kind of top line addition can it actually give? And what kind of margins will you be targeting for this particular segment?
So yes, we have identified about 4 locations for the food court business across different parts in the country. And over the next few months, we will open the food courts in those locations. We will announce the opening dates very soon. As far as the near-term visibility on revenues is concerned, I think it's too early to comment on that. We will see how the food courts perform and pan out, and then we will roll out a 3-year plan to scale up the business. But we feel that it's going to be quite profitable as it is synergistic to our.
Mr. Sharma, any internal targets that you set in terms of what it can contribute?
No, there are no internal targets. It's a joint venture partnership with Devyani. And we will open a few food courts, we'll test the waters, and then we'll decide the plan to scale it up.
Okay. So what kind of investments would you be making in a JV like that? What is the outlook on debt going forward? Because you have spoken about using monetization to reduce your debt. What's the plan here with the balance sheet?
Yeah, debt reduction and strengthening our balance sheet is a key focus area of our strategy. We plan to use whatever free cash flow that we generate from the business to pay down debt. And we are also in the process of evaluating the sale of 3 properties in Pune, Bangalore, and Pune, Mumbai, and Vadodara for monetization, which will likely yield about 300 to 400 crores of cash, which we will use to repay debt. As far as the food court capex is concerned, it's not significant in near term. I think it's not going to move the needle around either the capex or the debt reduction strategy at all.
Okay. All right, gentlemen, it was a pleasure speaking with the two of you. Thank you so much for joining us today. And the upcoming list looks very interesting. So looking forward to a lot of them. Let's see which way things go. But it's a pleasure to have you on the show today. Okay, all right. With that, we'll get into another break. When we come back, we'll talk about more stocks and the market moves. Stay tuned.